Good afternoon. So finally it happened. Silicon Valley Bank collapsed on March 10th on Friday. It was the 16th largest bank in United States and it is the second largest bank that collapsed. So what really happened? Silicon Valley Bank was most popular and it financed so many startup companies. It was the go-to bank for the entrepreneurial startup companies, venture capitalists, entrepreneurs. It started in 1983 and they had about $68 billion of deposit at that time. And because of low interest rate, easy money environment during last 2 years, their deposits base grew up to $190 billion and made maximum profit last year. So as they were raising so much money, Silicon Valley Bank started investing their money in short-term government-backed securities, US Treasuries or mortgage-backed securities backed by US government. Some part of their portfolio was called what is called hold to maturities, meaning they could hold those securities and not sell them until they mature. And they had certain percentage of their portfolio was available for sale. Whenever they need to sell it, they could sell it. So what really happened was because of inflation going out and Federal Reserve has increased short-term interest rates to very high rates to about 4.75% in a very short period of time. So whenever the interest rate goes up, the bond portfolio, the portfolio where you have the Silicon Valley Bank had their US Treasury portfolio or mortgage-backed securities, when they do this mark-to-mark pricing, the price of those bonds dropped. So of their $109 billion portfolio, they had a unrealized loss of about $20 billion. At the same time, when the money became tight as the Federal Reserve was increasing interest rates, all the startup companies, they started pulling their money out to, say for example, to make their payrolls or to raise additional money because it was getting more and more difficult to raise money from other venture capitalists, etc. And there were rumors basically that came out, say for example, Peter Thiel, who is a billionaire, who had, like co-founded many company, they told Silicon Valley Bank for their to pull out money from this bank because the bank was getting in a not a very solvent situation anymore, meaning their people are pulling out so much of money that they were in a negative situation, meaning they will not be able to meet their the depositors will not be able to pull out money anymore, and there were like rumors going around like that. So along that, basically everybody tried to pull out all the money, and then they basically become into a run in the bank kind of situation. Everybody wanted to pull out all the money. The stock basically precipitously dropped on a Thursday, about 60%, and next Friday it fell another 60% before the trading halted. All in all, the shareholders lost about 80% of their money. And in the meantime, their CEO, Greg Becker, basically had sold his shares about a month ago for about $3.7 million, and a couple of other C-level executives sold their shares, and they cashed out their employees. They got their bonus on Friday, so it's very suspicious whatever they did.
Impeccable. The 10b-5, the pre-planned sales plans were put on for the CMO and the CFO and the CEO, and then a few weeks later, or a month or two later, these big sales kicked in. Now, I want to be clear, Greg Becker, the CEO, had been pretty active buying and selling. But if you're somebody that's gotten wiped out, you're looking at this going, really?
On Monday, basically, the President Biden came out and basically announced that bank will be seized by FDIC, Federal Deposit Insurance Corporation. And then the US government is backstop all this, basically like investors, whether they had insured, FDIC insured accounts or non-insured accounts, all the accounts are going to be covered, or the depositors are not going to lose any money. And but at the same time, Biden is going to be firing all the CEOs and other the executives, because they didn't. If the FDIC had to run the bank, they did not need those.
The Silicon Valley Bank and Signature Bank. Today, thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks, can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well. Last week, when we learned of the problems of the banks and the impact they could have on jobs of small businesses and banking system overall, I instructed my team to act quickly to protect these interests. They've done that. They've done that. On Friday, the government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured, rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable. In my administration, no one is above the law. And finally, we must reduce the risks of this happening again. During the Obama-Biden administration, we put in place tough requirements.
Those kind of CEOs. And in the meantime, other talking heads like Jim Cramer's, they were encouraging the Silicon Valley Bank is a great stocks and they should be buying those stocks. So I have some of the clips in this video, please watch it. And so be careful basically listening to all these people, and the people recommending stocks. In this kind of situation, you might be losing all your money.
Year to date is SVB Financial. Don't yawn. This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB is the old Silicon Valley Bank. Recently bought one of our favorite research firms, Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year. They could come back. Yes, some of them come back here, but the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. Now, you have to remember that a stock that falls 66%, like SVB Financial did last year, it takes it a lot more to recover. After losing 2/3 of your value, you need a 200% gain to get back to even. This is arithmetic. Some people call it geometry. So you could argue SVB's nearly 40% rally this year is barely a drop in the bucket. And that's how I want you to think it. I think it's also a good example of why these bounce back moves might be far from over. These stocks could have more room to run, especially if you think they were driven down to artificially low levels by tax loss selling, artificial dumping, like we saw in Warner Bros. Discovery or Tesla. That's important because today was one of
So here is the little story about basically like, how really Silicon Valley Bank collapsed. And after that, basically like, another bank, Signature Bank in New York, they collapsed and the government got seized. And today, Wednesday, Credit Suisse is having problem basically that, one of the Saudi backers are not going to be like, entertaining further basically like, helping him Credit Suisse as a creditors, and there is having problems in other banks also. So that's a very trying situation right now. Hope you like this video. If you liked it, please hit the subscribe button so that I can create more some of these like videos. Thank you. Have a nice day.